Hello YouTube, it is Steve here again. We've had another fantastic trading day. So I'm doing this a little bit early because it's Friday. We are about half an hour from the close. A lot of things could change from here, but who knows? I don't know. I want to make sure that I get all of this in before I get locked out of making any other trades for the day through TradingView. So I have been day trading since about around like 10 o'clock this morning when I woke up. My alarm went off at 5 and I just decided to go back to bed because screw it, I'm tired. And I don't trade when I'm tired because you make mistakes. Just like I learned on Wednesday. I had been up here about 4 days straight, and I did not trade well at all. So anyway, getting right in, as you can see, we have quite a few more lines than I had the last time that I had this chart up. Basically, I make a habit of bouncing ideas off of other traders that I know, and given that a very, very clear downward trend was forming, I started marking where I would consider significant areas to be. And so far, even though I was just kind of spitballing, it's worked out pretty well in pivoting back and forth between these points over the last day, roughly. Anyway, so as you can see, the S&P is down by quite a bit. We're almost down by another 100 points. I caught a lot of this downward spiral here, which was fantastic. I got my 5-minute chart over here, where you can see the rest of the points that I had been plotting in this sort of range, and that for the most part worked out pretty well. I wasn't trading off of these directly except for the 44.37 point because it kept hitting that repeatedly when I was scalping during lunchtime, and that was actually probably my worst trading area of the day. I got up, entered a short trade around here, and then as it was going down, I lost my internet connection, and when it came back, I lost about like 18 points or something like that, so I was a little bit miffed. However, thankfully, I made the rash decision to immediately reverse the trade and caught most of the big move up, so that was good. I made back everything that I lost and then some, and then kind of scalped on the way down. During lunchtime, I was getting chopped in and out. I took like 5 bad trades in a row, give or take roughly, I want to say 25 points in the red there, somewhere around that line, which is, it sounds really bad, and it is really bad. However, that basically just brought me back to break even for the day, roughly. However, then I ended up going short right around here and was scalping in and out. I was taking short signals on the 37 line every time that it kept going back down up there. The way that I have my bracket set up for when I'm scalping is that when I have conviction in a trend, which clearly downward, I have a bracket order set up that is automatic take profit on 4 points. So I had my one contract that I was just holding short, and every time it would hit 37, I would just it would just trigger that trade, and so it kept going down, and I kept like being irritated, but being like, all right, well, you know, at the very least, I'm gaining back what I lost from being whipsawed around here, because I went short around here, give or take, when we hit the 37 to begin with, and then got immediately jumbled up, and I was taking trades off my indicators, which I usually don't do. But this being a strong trending day, yesterday it would have been like perfect to just follow moving averages or something like that, which is in general not a very good strategy to do. But yesterday it worked, and today I was like, well, we've got a really strong trend today, so that might work too. It didn't work. Bad idea. But anyway, so I ended up. My very last of my scalps was set to right about 44.30, and it just missed it by like a point for getting in an extra contract when following all the way down. And so I was like sending all these excited messages to a trading buddy of mine, being like, we're almost at 4,400. You know, it was especially funny because it kept hitting this 44.15 level, as you can see. There was very, very strong support. It's like right around one of these minor high value nodes here. But I was literally sending a message being like, yeah, there are a lot of buyers on 44.15. Like, it seems like they really don't want to break that down. And within like 10 seconds of me hitting send, it just all of a sudden just like broke down and started crashing. And I was like, oh, hell, it's happening. But anyway, as you can see, we came down quite a ways. The low of the day is 43.90 and 25 cents. I cashed out at about 43.95, give or take, from my average contract value of 44.36, I think, either 36 or 34. One of the two, doesn't matter, it's only 2 points. And when you're making a move that wide, losing out on a couple of extra points is not a big deal. But anyway, I know that I'm focusing a lot more on the intraday than usual with this video, but it's just been a very, very exciting day. Somewhat stressful, but you know, when you have a plan, you stick to the plan, it can all work out. And with the volume profile being this shape, like, it's, you know, you can kind of, like, when it failed to break back above the point of control here, like, I kind of got the gist that it just probably wasn't going to go back up unless we had some major, like, good news or something for the morning or for the afternoon. And we really didn't have that here. We had like one economic event today, this morning at like 10, but it wasn't anything special. Looks like we did get, yeah, no, we were kind of just in the early morning chop zone when that whole thing happened. So I don't think it really had an impact on the market. It wasn't like, you know, Powell giving any sort of speech or anything like that. It wasn't an EIA, it wasn't FOMC, it wasn't any of that. I don't even remember the name. I mentioned it yesterday, but it is what it is. It doesn't matter. So back onto the long term, you can see I do have a lot of lines here. A lot of traders will be like, well, you don't want to have too many support and resistance lines. I agree on the intraday. The distance between all of these is a pretty fair amount. They're all like 20 to 30 points minimum, which on your average day, when I use this 8-hour chart, when there's not a ton of volatility or anything, like, that's a pretty solid amount for a move, is, you know, 20 to 30 points. That's a lot. But as you can see, we've had some pretty radical moves here over the last couple of months. It's been very, very volatile, which, you know, it's funny because I actually trade better in downward markets just because I'm a trend trader. And as I said yesterday, what's the old saying? The bulls take the stairs and the bears jump out the window. So, you know, you can see, like, immediately when a support level is just lost, it tanks. It's down. And so I love those big moves because I can catch them. You know, I don't have to worry about a top or a bottom like you do with scalping. I just kind of am like, all right, well, this is how we're doing things today. And, you know, you can see that the volume has been rising on each of, you know, these trading sessions. So for now, we are going to definitely be keeping this short. As you can see, we are up 6.5 grand. Which is one of the things keeping our equity down here in line, because the market is turning against us something fierce on our positions. So we're going to take a look at everything else here and see what we can do, or what we feel like doing. So let's start off with gold. I haven't taken a look at gold yet today, and of course it is kicking me in the balls yet again. We have a cross under here. However, it is still up in the breakout zone, so I'm going to keep it right where it is. If we have any more bad inflation news or something like that, it'll probably rally. If this wasn't an experiment, there's a good chance that at this level I might add one contract, just so that even if we get up to break even, we've still made money. But because the rules of this thing say one contract per instrument, we're not going to do that. We're going to leave it right where it is. And if Monday is red after Sunday's open, there's a good chance that we are going to go short on gold, because why not? Moving on to copper. As I've said before, we are following mostly the supply and demand between these support and resistance areas. Indicator is still bearish here, which is kind of odd, because I would have thought that given the last 2 heavy green days, we might have had like a little bit of a rebound, but you know, it is what it is. Copper's really choppy. When you get a good entry, when you get a good exit, you're making a lot of money. Otherwise, you're getting a lot of chop. Which is part of the reason why I keep harping on this. I am not really following the indicators on this particular trade. Part of the rules of the experiment, I have to have a reason for making discretionary decisions. These are my discretionary decisions. The support and resistance areas. That's all there is to it. I'm on a macro factor long term. I'm extremely bullish on copper. Electric vehicles, they use a lot more copper than just regular internal combustion engine vehicles. And that's just how it is. So as we see more of those, more charging stations, more batteries, and all that, I know a lot of people think about like lithium and stuff as the electric vehicle go-to sort of element to invest in. But no, copper is also really, really good. You need copper for more than just electric vehicles too. It's used in a lot of electronics. It's fantastically useful. I like copper a lot. It's fantastic. Moving on, since we're not doing anything here, on to crude. So looking at crude, I'm personally waiting to start shorting this myself. On this one, I am 100% following my indicators because it just works really well with them most of the time. It is statistically viable to use my oscillator on this. Even my heavily modified MACD, even though that is somewhat less responsive, it does still make money. Oil is definitely one of the ones I'm much more comfortable trading. We're going to stay long for now. We've come up off the all-time highs, but we've still got demand rising on macro factor. We'll have to wait until the EIA next week and see how that goes. So on to natural gas. We continue to be short. It continues to have been a good move. The oscillator is still bearish. Heavily modified MACD looking to turn bearish. The red shading here is saying that it's a good opportunity to be going short soon. I don't generally follow that though. It's just kind of an aesthetic feature of the from the guy who originally did most of the code for this thing. But anyway, excuse me. We are going to stay short for this for now. Because we're still in this whole base area that we've been in since almost the beginning of this entire, since the beginning of this entire experiment. We've been in like this little range apart from this large rally and equally large fall. So we are going to stay short for now. We'll see how that goes. On to the bonds. This makes sense though that the bonds would be rallying like this because of flight to safety. We still haven't crossed out of that zone though, so we're going to stay short. We are kind of hitting this little range where it kind of like tried to rise up here, a bull trap I would call that. So we'll see if this actually manages to continue rallying. We might see a little mini head and shoulders here, which since it's an inverse, that would be very bullish. Then I would go long, definitely. But we're going to stick to the indicators for this one, especially the oscillator here. Although, again, MACD on this one also does work fairly well, especially if you're just following the histogram. There's not really a whole lot of chop like in this area where like a couple of them are green and then it goes right back to being red. There's not very much chop. There's a lot of money to be made off of bonds doing this. Onto the 10-year, probably same thing. Exactly. Same exact thing. I have mentioned this before. I don't really trade treasuries that often, but so far so good. I'm liking where this is going. Well, minus the pullback that's making our numbers not as large. Because that's the whole goal of this whole game, is you turn numbers into bigger numbers. On to silver. Silver is still doing pretty good for us. Minor pullback. We're still sitting on the very top of this big candle right here. The second to last green one. We did kind of hit a resistance level right up here. So I'm not sure how much higher that's going to go. But we still have a pretty hefty gain. We've got some room to work with. Looks like there is about to be a cross under forming. However, we are still in the breakout area. We're going to hold this long for at least another couple days probably. And then lastly, the Russell. The Russell and I are not friends. I do not like the Russell very much. I have not had a lot of time to develop my strategy for the Russell, but I know for a fact that my indicators on the intraday, they just flat out don't work for it. I mean, at least I haven't done it on a volume tick chart, which is how I usually day trade. But as far as timed trading, they just don't do well most of the time, like at all. Like looking at the 5-minute chart here, would have got into this after most of the rally was, or like half of the rally was already done, and then would have gotten out of it at like break even at best. And then caught like a few points here and there, and then be caught in the chop here, and then if you're lucky, you're short, but it's already rallying out of that pit. Oh, the S&P is already back up above to almost 44.15, our dreaded "there are buyers here" level. So for now, for the Russell, as soon as this disappears. Wow, that's obnoxious. Okay, we're gonna do that. All right. Sometimes TradingView just does not cooperate with the tooltips when they pop up. So looking at the 8-hour chart, though, we are still in clear breakdown area. We are going to stay short here, which is fine with me because we're still up almost the max that we've made off of this trade. I think we might be just about to be break even with the Russell so far, out of all of the terrible trades that I've made with this thing so far. Honestly, looking at the indicator back and forth, it's choppy as hell. Like even on the MACD, which is a lot smoother than the stochastics. So I think in the future, I'm probably going to lean towards the modified MACD for the Russell, because it just does not like my oscillator at all. Oscillator is fantastic for the S&P. Like we go back to the S&P, and there's like almost no real chop. Like it's so much smoother, which the moves are a lot bigger. But apart from like this one little area, there's not really a whole lot of chop, and you'd only take a few points of loss even if you didn't have a stop loss going on, because it almost immediately switches back to being short and then continues on. Like we got a cross under here at 46.33, and now we're down to 44.16. That's no small potatoes as far as a move on a single trade using just an indicator goes. That's not bad. It is statistically viable. I originally designed the settings on this oscillator for the NASDAQ futures on the 3-minute time frame on the daily intraday, but it works pretty well on both ES and CL, so that's what I use it for. I generally adapt my settings and indicators and strategies and all that for individual instruments, which is part of the reason why I can generally just kind of like look at all these various things and go, oh yeah, we're doing XYZ, and then move on very quickly. But yeah, no, we've got 15 minutes left until the close. We're about 20-ish points higher than we were. Yeah, roughly. So, I mean, like I said at the very beginning, we had half an hour left. A lot can happen in the last hour of trading. And that appears to be taking place here, but you can see the levels that I printed down here have printed, or rather, have kind of held up really, really well. Which, I mean, they're mostly pretty round numbers anyway, so it's not really like I'm magical or anything. And to be honest, like if I just go ahead and throw on my fibs here, it's probably going to be pretty much the same. And yeah, that was a pretty ad hoc fib that I just printed there. But for the most part, yeah, no, it's pretty in line with that as well. Although I find it a lot more helpful when you do things manually. So that's where I'm going to wrap up for the week. I will see you guys Monday. I hope you all have made some money. I know I certainly have. This has been a pretty good week for me, apart from Wednesday. Wednesday was just terrible, but now I am in the green and then some, after I made my break even yesterday from Wednesday's loss. I was down pretty badly, just getting chopped in and out on the S&P. I was down roughly, let's see, do a little bit of math here, a little bit over 100 points in one day, which is pretty terrible. But when I ended the day, I was down a little bit over 20 points. Then the next day I was up by like 3 on top of my break even, and then today I had my bad open and then recovered from it pretty quickly, and then had my bad chop in the intraday and during the midday session around lunch. And then I caught that really big fall at the end. So, yeah, no, I'm doing pretty good. Hope you guys are good too. And I will see you Monday.